Sellers in the Kelowna market need to get serious. Well, actually, you needed to get serious about 6 months ago, but now it's critical. Inventory is at its highest level in a decade, prices continue to drop, and only 1 in 8 properties are selling each month. That means that 7 out of 8 sellers are sitting and waiting while their equity erodes. If you're not priced below your competition, you're essentially invisible to buyers. And here's what makes this harder. If buyers told you that you were overpriced 30 or 60 days ago, you're even more overpriced today. We're seeing a race to the bottom, especially in the condo market, which is exactly why the sellers who act decisively now will come out ahead. Let me show you what happened in Kelowna last month, and you'll see exactly what I'm talking about. Starting with the number of residential sales, 2025 continues to outpace 2024 and 2023, and it was up about 1.6% month over month, which is steady for the fall market. You're going to see some headlines that are going to tell you that sales are way up, but the truth is it's only up 1.6% month over month, and we're roughly about the same number of sales that we saw in March or April. And the reason that you're going to see headlines saying sales are way up is because we are up considerably from 2023 and 2024, but we have to remember that those 2 years were some of the slowest years that we've seen in the last couple of years. As an example, here's what sales look like year over year. In the single-family detached homes in Kelowna, we're up 34% year over year from this time last year and 38% in townhomes. But as we saw in the previous slide, that's not telling the whole story. Yes, we're up from a down year, which is good news for the market, but we're only up slightly month over month, and we're on pace to have a normal year. Taking a look at residential inventory, we are down 1.2% from how much inventory we had this time last year, but when we have over 3,000 total listings in the market, that's not really a significant decrease. And if we take a deeper dive into how much inventory we have, the blue line here is the 10-year rolling average of inventory, and we are considerably higher than that 10-year average. We have more inventory now than we've had for the last decade, but over the last couple of months, that inventory has been tightening up slightly. We're only talking about a couple hundred listings though. Diving into the current pricing in the market, let's look at the composite benchmark price in the central Okanagan or Kelowna, because this gives us a general sentiment of what the market's doing across the board. In September, that composite price came in at $783,000, which is starting to fall over the last 4 months, and it's even lower than what we started the year at in January. It's also down 13% from the peak price that we saw in the spring of 2022. Prices are essentially back to where they were in September 2022 after that big market correction. And if we look at what it's done over the last 12 months, we're down from where we were in January, and over the last 4 months it has been steadily decreasing. Starting with the benchmark price of a single-family detached home, it was down nearly 3% in September from where it was in August, coming in at $1,020,000. Year over year, it's only up 0.3% from where we were at this same time last year. Looking at the benchmark price graph over the last 3 years, the price is down 13.5% from where we were in the market peak and is steadily falling, as you can see on the right there. Over the last 3 or 4 months, that price has really started to decline, and we're now lower than we were at the start of the year. Looking at the last decade, as we always do, that price has doubled since 2015, but really there hasn't been much growth over the last 3 years, and we're inching back down to that $1 million mark, which we haven't been below since October of 2024. Moving on to the benchmark price of a townhome, it was actually up 2% month over month and came in at $736,000 in September. Year over year, it's up about 1.5% from where it was this time last year. But looking at the benchmark price graph, it's hard to look at this one kind of in a vacuum because there's so much volatility. It is down 12% from the market peak, but over the last 3 months it has started to increase again. However, it's only back to slightly close to where it was when it started the year. Going out over the last decade, it has nearly doubled from $400,000 10 years ago, but we are kind of bouncing around that 700 to 720,000 range for the most part of the last 2 years. This is an interesting segment of the market because there's so much volatility, and it's really hard to predict where prices are going to be from one month to the next. The condo market continues to slide. It came down another half percentage point from August to September and came in at 494,000. Year over year, this price is down as well. It was just over $500,000 last September, and we're just under $500,000 now. But if we take a closer look at the graph, over the last 4 months, condo prices in Kelowna have really started to decline. We've had 800 to 900 condo listings on the MLS for the majority of this year, and that's really having an impact on prices. We're down about $20,000 from where we started the year, and we're down 11% from the market peak of 3 years ago. I think this trend is going to continue in the condo market just because there's so much inventory out there and buyers are being very choosy of what they decide to buy. But if you've had your condo for the last 10 years, you can see that that price has basically doubled from where it was a decade ago, but we are back to essentially the price that we saw in the fall of 2022, which was the bottom of the last market correction. Moving on to the price ratio, this is the ratio that a buyer would expect to pay, so the percentage of the final listing price. Now, we have to keep in mind that this measure is basically what the last list price was. So if a property has had reductions or things like that, this is reflected here. So the properties that are selling, once they're priced properly, are selling between 96 and 98%. In the single family detached homes, it's selling for 97% of the list price. Townhomes are selling at 98% of the list price. And condos, buyers can expect about a 3.5% decrease or deal off of the list price. Taking a look at the months of inventory, this tells us if we're in a buyer's or a seller's market. In September, the single-family detached home market came in at 9.2 months of available inventory, which is essentially the same as it was in August. This is one of the factors that's pushing prices down or putting downward pressure on prices. In the townhome market, we moved from 9 months of available inventory to 7.9 months of available inventory. It's not a significant change from 1 month to the other, but this could be one of the reasons that prices in the townhome market went up slightly as we moved closer to a balanced market. And in the condo market, we still have over 8 months of available inventory. We've had 8 to 10 months of available inventory in this segment of the market for well over a year, probably close to 2 years, and this is what's putting that downward pressure on prices in the condo segment. So just to recap, across the board, we are in a buyer's market. We're bouncing around between 8 to 9 months of available inventory in all the asset classes on a month-to-month basis. If you're a buyer who's been sitting on the sidelines, this is what you've been waiting for. The same conditions that are crushing sellers, like high inventory, dropping prices, and low sales ratios, are creating genuine opportunities for you right now. This is what a buyer's market actually looks like. You're not competing with 8 other offers anymore. You can take your time, do your due diligence, and negotiate from strength. The question isn't whether you can find a good deal right now. The question is which deal makes the most sense for your family and your financial future. But here's the thing. You can't wait too long when the right property appears. A buyer's market doesn't mean every property will sit forever. When you find the one that checks all of your boxes and it's at the right price, chances are someone else has their eye on it too. I just had a client miss out on what would have been the perfect property for them because they hesitated, they wanted to wait for over the weekend, and it turns out someone else put in an offer before we could. For their sake, I hope another one comes along soon. This opportunity is real, but so is the need to act decisively when you find what you're looking for. If you found this information helpful, YouTube thinks you'll like this video next. Thanks for watching. We'll see you next time.